In the world of personal finance, who controls the money? Who profits the most? Who always makes money no matter what the economy, the job market, or the stock market is doing? The responsible bank owner always makes money. Now, don't you think it's time to start thinking like a banker and reclaim the banking function in your life? Borrowing money seems to be one of America's favorite pastimes. We love to borrow money, and sending our wealth to others through the interest we pay is one of the biggest destroyers of our wealth next to taxes. We give 30 to 35% of our money away through the interest we pay the banks and the credit cards. But if we pay cash, we have another problem. We give up all the future value of our money. Now, we may not have an interest payment, but we still have an interest cost. The lending institutions have taught us to focus on the interest rate we pay, not the volume of the interest we pay. The interest volume we pay is much more detrimental than the interest rate we pay. Take your house, for example. Now, you may think, hey, my house is only 3% or 6% interest, but your focus has been detracted from the real cost, which includes the volume of the interest you're paying and the opportunity cost of all that future wealth you're losing by giving your money to the bank. And this future wealth is your retirement income. Now, suppose you have a $300,000 mortgage on a new house and the interest rate is 6%. By the end of the first year, you'll pay off less than $3,700 of principal, but you'll pay the bank nearly $18,000 of interest. By year 7, you'll pay off about $31,000 of principal, but you'll pay the bank over $120,000 of interest. In the first 7 years, 79% of your money goes to the bank. Now, this does not include PMI, which can easily be another couple $100s a month. Now, what happens after 5 or 7 years? Most people either buy a new house and start the process over, or they refinance their loan. Now, why do banks want you to refinance your loan all the time? Because it starts the whole process over. You may be paying less per month, but the bank is getting more of your money through the interest you're paying them. And if you have a 30-year loan on your house, you'll give the bank nearly $348,000 in total interest. What if you could refinance your house through your own banking system and redirect the interest and the principal back through your system and then generate a compounding return on all of that money every year for the rest of your life? And better yet, what if you never had to pay taxes on that money? Well, you can through your family banking system. Now, the problem isn't necessarily the interest itself that you're paying. The more significant issue is that you're financing your lifestyle through someone else's banking system, and you're shifting the value of all the future value of your money to these other institutions. Let's take a step back for a moment and let's look at what banking actually is. Banking is nothing more than giving somebody else control of your money and letting them use it so they can generate a profit. It's important to understand that there's always going to be a need to safely store your liquid capital so you have access to it. And there will always be a need for financing. Banks fulfill both those needs. Banks are great for transactions, but they are a lousy place to hold your capital. Now, we've all been taught to put our money into someone else's banking system when we get paid. We've been taught to hold it there until we use it. The problem is that it's somebody else's banking system, not our own banking system. You can't own a bank unless you've got millions and millions and millions of dollars and you spend years going through the process, but you can start a business that functions like a bank and profits like a bank. The financial strategy I'm referring to is often called infinite banking concept, bank on yourself, cash flow banking, or become your own banker. I prefer to refer to it as your family banking system. The concept of a family banking system is nothing new. It goes back to at least the 1700s when Meyer Amschel Rothschild launched a banking dynasty that still survives to this day. At its core, your family banking system is a financial strategy that allows you to create a banking system that you own, you control, and you borrow from, rather than saving or borrowing your money with a traditional bank. It's more flexible than conventional bank financing. Your banking system will help you build wealth using the same financial principles banks use. Principles such as constant cash flow, positive arbitrage, velocity of money, compounding interest, and untaxable wealth. This is one of the key financial strategies that has helped families such as the Rothschilds and the Rockefellers maintain and grow their wealth for so many generations. Now, banking isn't a product, it's a process, and many financial tools can be used, but there's one financial tool that we prefer to use. And the financial tool we prefer to use is the same financial tool that banks and corporations tell us not to use, yet they stash hundreds of billions of dollars into these accounts. Do you suppose they know something that we don't? Now, these accounts we use are high cash value, dividend-paying permanent life insurance policies. And by utilizing the banking function built into specific life insurance contracts, one can create a system that acts and profits like a bank. Now, your family banking system allows you to save capital inside of a policy instead of a bank. This strategy offers a range of benefits that traditional banks cannot provide. Benefits such as guaranteed returns. You see, the cash value of your insurance policy grows from the interest and dividends each year. Now, dividends aren't guaranteed, but the companies we use have been paying dividends for 150 to 170 years. And unlike stocks, whole life returns don't come with volatility. Your returns are locked in. You're never going to lose value in your account. This strategy offers tax-free passive cash flow. It's a protected asset. As a general rule, creditors can't seize your whole life insurance policy. They can't force you to surrender it or borrow against it. And that goes for bankruptcy in most states as well. Permanent life insurance also gives you protections from divorce. Life insurance and the cash value inside your policy is fully protected or partially protected in many states from divorce. This strategy is a great tool for retirement income. It's a great tool for estate planning, and it gives your family a death benefit. Now, we call life insurance an and asset. Most investments, you put your money in, you earn a return, you take your money out. Your money only works in one place at a time. But life insurance is a unique asset because it offers the unparalleled opportunity to gain a return on your money in multiple places at the same time. One of the key features that makes life insurance so great is the cash inside your policy is contractually yours. And unlike a 401k or an IRA that don't allow you to touch your money until you're 59 and a half without paying a hefty fee in taxes, life insurance gives you access to your capital at any point in your life, any reason, without paying penalty or taxes. And contrary to popular myth, you don't borrow your money. You borrow from the life insurance company, and your money stays inside your policy and continues to grow uninterrupted. For example, you borrow money against your policy to invest in the stock market or to invest in real estate. Your cash is used as collateral and stays inside your policy and continues to grow uninterrupted. Now the money inside your policy is growing, and your investment in the stock market or real estate is growing as well. So your money is working in multiple places at the same time. And because the loan is secured by your death benefit, you can borrow at low interest rates. And because you borrow money at simple interest and your money continues to grow at a compounding rate, it's possible to create positive arbitrage or profit when you borrow money. And not only that, you have a death benefit, you have financial protection for long-term care, and financial protection for critical care. The design of your policy matters. Permanent life insurance has two components. It has a death benefit component and a savings component. The savings component is where your cash value grows. You can think of it as a savings account. The death benefit component provides tax-free money for your family when you pass on. Your policy can be designed to provide a high death benefit or a high cash value. Your policy can be designed to have no cash value and a very high death benefit, or it can be designed to provide more long-term care benefits. If a policy is designed to provide a high death benefit, then most of your premium goes towards the cost of the insurance to create a death benefit. And the policy's cash value is going to grow very slowly. Policies designed for a big death benefit are not favorable for retirement income or the family banking strategy, but they are favorable for generational wealth. When we design a policy focusing on cash accumulation, we want to pump as much money into it as possible while maintaining its function as life insurance. Policies designed for high cash accumulation are ideal for retirement planning and for family banking systems. The companies we use offer what's called a paid-up additions or PUA rider. The PUA rider lets us overfund your policy and allows you to pay additional dollars into your policy. Overfunding your policy is how we turbocharge your policy and significantly increase your cash value and your death benefit. Now, you don't have to add risk to your life to improve your investing performance. You can simply add a high cash value, dividend-paying life insurance policy into your life. If you want to protect your assets and increase your wealth every day for the rest of your life, or if you want to add guaranteed tax-free income to your retirement, or you want to learn how to function like a bank and profit like a bank, then click on the link below and schedule a time to meet. In the meantime, time, download my book, Function Like a Bank, Profit Like a Bank, and watch some videos. Learn about the process. Thank you.